Hello, everyone. This is Noah and John, and we are from UrbanDigs, and it is Friday. That means you're going to get your weekly Manhattan market update. John, let's get right to it. I'm looking at supply. It's at 8,065, going down. Show me the chart.
Yeah, you're right. No, that's going down. That's another 3.5% drop. It's interesting. I think we're going to break 8,000, which would be surprising. No.
Yeah, we're starting to get into the realm of surprising now. I think expect the unexpected. We got some stuff coming up here that's going to make yourself think here. But yeah, it looks like we're going to go below 8,000 into the 7 handle before the year is out. Let's move on to pending sales. The measure of demand, it came in at 2888. That looks like it's going up. Johnny, show me the chart.
It is going up. That's 3% up from last week, 2888. So we're look, pending's going up, supplies going down on a macro level. This is kind of what you want to see. And no, I wouldn't be surprised if we see pending cross 3,000 soon.
I mean, if you would have told me a couple of months ago that supply is going to go back down to 7,000 and pending sales might break 3,000 by the end of the year, I thought there was a bigger chance that I'd be growing hair back, Johnny. I mean, this is just unbelievable. The rebound in activity. Again, we're not talking about price action here. We're talking about activity of what's going on.
Exactly.
Let's go to the weeklies, Johnny. I'm going to my dashboard. I want to look at my weeklies. I'm looking at supply. We came in at 167. That looks low. Show me the chart.
It is low, and it's not surprising. We're really kind of closing out 2020 here. I think this week and the following couple of weeks are going to be super low on the actives front, but that's like a 26% drop in the week before. And these numbers in the next few weeks are going to be very erratic, and it's going to be much more sort of a window on particular buyers and sellers than the market as a whole.
Yeah, and I hate to say it, but if you were buyers, I mean, the peak supply conversation when they were talking about it 6-7 weeks ago, whenever that was, I mean, that was max options were back then. You just don't have as much stuff on the market right now. Your choice is dwindling in terms of buyers. Maybe that's why they're scrambling to get deals done now. Maybe they're sensing that their window is closing, John.
It's certainly could be. I think with all the news out there, if you're paying attention to the right channels, you're realizing that there are deals to be had, but they're not as many as there were a month ago, and certainly less than there were 2 to 3 months ago.
Right. All telltale signs of the reflation trade in play. Looking at contract sign, the measure of demand, 1 week contract sign. Manhattan put 238 deals in. I absolutely love it. Johnny, show me the chart.
Yeah, it is. I mean, that's 8% from last week, which was still over 200. So this is look. Demand is robust and it's strong, and we're heading into the close of 2020. And usually when we're seeing this number sort of taper off, it's just increasing.
This is active season levels right now. I mean, just to let you guys know that this is not the normal time of year. We kept talking about December, a slowdown. We're just not seeing it. We are just
just to sort of put this into context, this is roughly 30% more than we had this time last year.
Right. It's just crazy. All right. Very, very interesting, John. All right. Now let's go down and let's break down some numbers. We like to break down some numbers. All right. What I'm looking at here, we're going into Q4. All right. The Q4 reports come out in a couple of weeks. We like to keep the UrbanDigs viewers ahead of the curve, take a peek around what's coming around next, right? So we're going to have a Q4 tone to today's conversation, right? So this chart right here, what we're showing you is all closed sales in Q4. That's October, November, December, regardless of when they were signed to contract, okay? And what we're looking at is the median listing discount, of course, at the time of the deal. We're doing that at the time of the deal. So this is based on the contract sign date, not the close date, to try to remove that lag of closed sales. And what I'm seeing here, we talked about this a few weeks ago, John, and we said we're going to talk about an update as more data comes in. October now has 93 deals in, twice as much as the last time we did. I think we had 47 last time. And when I'm looking at negotiability right over here, average is still at 10%, median is at 9%. We're up from the last couple of months, and we're kind of approaching, if you look at this chart, we're kind of approaching the levels that we kind of had, again, back here. So, this is not November and December. This is not like real-time deals today. This is the closest kind of information we can get in terms of who signed the contract most recently and those deals closed, and where are those listing discounts.
Yeah. And it's very interesting numbers, and it's curious that it's ticking up. And no, I wonder if this is sort of sellers who have finally gotten the message, because the way we track it from the original asking price. So these could have been sellers who've been on the market for a while and have finally decided to realize the market may have been quite a bit below their aspirational prices. So it seems like both sides are sort of coming to the market here. So either way, with the increasing volume, I'd like to see this chart.
Yeah. And I mean, it also tells me that I think this is going to be a tale of multiple bottoms. And right now it looks like if you signed a deal in May and June and you signed a deal in October, you got some pretty good deals. For whatever reason, after the market reopened in July and August, there must have been a flurry of activity. They just did not get that discount that it was before and after. So let's just see how the data comes in. And it's important to note that these discounts, again, they're not 15, 20, 25%. They're in the 9 to 10% range. Okay, very important. Now, let's look at something else, okay? Let's look at listing discount, okay? Listing discount, we want to break it down by price points because this is what agents are asking us. This is, again, Q4. All the deals signed in Q4, all those deals under $1 million. Are you a co-op? Are you a condo? What was that listing discount from original ask? And when you look at this, John, I see something very, very interesting because, when you look at co-ops, let me just change my color over here. I don't want to have the same color over here. But when you look at co-ops right over here, look, co-ops are less than condos here. They're less than condos here, and they're less than condos here.
Yeah.
Right. So 3 million and below, condos are offering a bigger discount than co-ops.
Mm-hmm.
Okay. And you can see the numbers here. Now, once you get over 3 million, co-ops are at 10%, condos are at 9.5%, co-ops are at 13%, and at 10% over 4 million. It's just an interesting take. And this is pure data, John.
Yeah, it's interesting too. And, you got to think that co-ops, once you start getting over the 3 million mark, you're starting to look at a dwindling buyer pool because you're suddenly starting to think about 50% discounts. You're starting to think about, multiples of cash on hand after the close. So, your buyer pool really, really shrinks. Whereas condos, the buyer pool sort of is a little bit, I think it's a little bit thicker at those price levels.
Yeah. And I mean, it's just good to see it. It's just good to see it. I mean, there's no transparency right now in this market. So like to see pure data. And again, this is Q4. So this is Q4. This is going to show what's in the reports that are going to come up. Are going to show variants of these kind of trends. If you're a condo in the 2 to 3 million sector, you're giving up the most right now.
Yeah.
If you're a co-op, over 4
million. Look at that co-op, 1 to 2 million, 4%.
I mean,
I would not have guessed that.
Yeah. And I mean, one has to wonder, is it a lot of 1.1, 1.2, $1.3 million places kind of close to that 1 million mark and not closer to the 2 million mark? But it's just really interesting to see the numbers.
Yeah, I think it's mainly the bulge bracket, starting to get into the 2-3 bedrooms that people are after in the pandemic, post-pandemic.
Yeah, that makes sense. Exactly. And finally, John, I want to end right over here, guys. We do have Q4 coming up. All right. Here at UrbanDigs, John and I have some internal tools that you guys are not privy to. I'm going to give you a sneak peek at one of those tools. This is my quarterly report tool that updates every day. I get to see which way the quarter is trending, right? And when I look at this, I'm looking at right over here. Oops, I don't want to do that. Let me get out of this right over here. Excuse me. But when I'm looking at Q4, right, this is Q4 2020 versus Q4 2019. This is my year over year trend. Just to give you some expectations on what's about to come. Average sales price, flat. Average price per square foot, down 2%. Median sales price, flat. Median price per square foot, down 2%. I'm not looking at days on market because we had the rigging and we had we shut it down and we brought it back. So that's affected. But price trends are not down. And the reason is because fall and Q3 and Q4 of 2019 was the bottom of the market before COVID. So you're comparing now to the bottom of the market. So you're kind of two bottoms comparing to each other, Johnny.
Yeah, no, it's very interesting stuff, Noah.
Yeah. Well, with that, we'll call it a day. That is John Walkup. I am Noah Rosenblatt. We're both of UrbanDigs. Have a great weekend, and we'll catch you next time.